Let's pull up, also take the discussion forward with Neil Parikh, who's joining us now from Parag Parikh Mutual Fund. Neil, very good afternoon. Thank you so much for your time. I won't talk about day-to-day market with you, but I want to talk about, how the investor behavior is right now. Your house is considered as one of the most conservative houses. What are your interaction with your clients happening? I'm sure there's a big addition which must have happened post COVID. So, what are your thoughts on that?
Yeah, thank you, Ajaya, for having me here. So clearly, there's been some maturity of the Indian investor, in terms of investing for long-term goals, and the SIPs are a way of doing that. So that discipline of SIPs is definitely coming in over the last 5 years. You mentioned COVID. I think people have had a good experience over the last 5 years in SIPs. So the people who stuck with their SIPs, who did not stop their SIPs, have seen a great performance there. So I think the SIP culture is going strong. I think that's a lot of sticky money that's there. I don't see that churning too much. On the other hand, obviously, expectations are quite high for investors. I think the last 2 or 3 years, we've got about almost 20% returns from the market, and people think that that's probably going to be the way forward. But I think one thing, communication from our side is to temper down the expectations. It's great that we got these returns in the past, but going the future, these might be a little muted. As we know, equity markets don't go in a straight line; they're always ups and downs. So be ready for not such great returns going forward. So temper your expectation is the main communication here.
But what are your thoughts? You have seen cycles. Your team is a very admired one. We are also heading into a very important event, which is elections. How does that play a factor overall?
So election is just an event. We don't pay too much attention to that. So the things that are important to us are the business quality, the management quality, and on top of that, valuations have to be attractive, for to invest in that in that particular script. So that's what we are focused on. Elections will come and go. We've seen that in the past. Elections came, gone. There could be some volatility for those days ahead. In fact, that could give some buying opportunity. But other than that, it's just an event that will come and go. So we don't put too much emphasis on an election year. We continue our process the way it is. So that's actually worked for us for the last 20 odd years. So I don't think we'll be changing that anytime soon.
I want to understand from you, is there a risk in the market from the sense that bulk of the investors are bull run investors or may have accelerated their journey in the last 3-4 years? Do you think this money flow which is coming, it will be sticky, or every time the adage is that when the correction comes, people will run away? Do you think the maturity has come that dips will be bought?
Yeah, so Ajay, the common theme today is buy the dip, right? I mean, and I think over the last 10 years, the new investors haven't seen a elongated bear market or a time correction as such. Even in COVID, the markets went down and quickly recovered, and people think that that's kind of the norm, that when the markets go down, you buy the dip. So I fear that a lot of the younger investors have not seen such severe bear markets or markets where the stocks don't move at all, a time correction. I think that will be a big test for investors if we ever go through that phase. We've not gone through that phase in the last 10 years. I think once we go through that phase, I don't think a lot of that money will be sticky. There will be some money that is very fickle and hot that will probably not see the day.
How are your positions in overseas markets panning out? Now the narrative is coming that US market in particular has become very narrow. In fact, 40% of the market cap, global market cap, is US now, and within US, it's the Magnificent Seven which is actually gaining. You guys have exposure there. Any observations on American market?
Yeah. So obviously we have investments in Alphabet, which is the parent of Google, Facebook, Microsoft and Amazon. These are the four stocks we've got in our portfolio. I think if we had the if the foreign limits were open and if we had a chance to buy these stocks, we probably would be buyers of these stocks right now. I think long-term trends are very much in favor for these companies in terms of cloud computing or artificial intelligence or just generally the digitalization. These companies are at the forefront of those innovations as such. Also, they are actually pretty well attractively priced. They're not overly expensive. So some of these companies are at sub 30 price to earnings multiple. So yeah, if we had the chance, we would probably be buyers still in these companies.
Fair point. But are you seeing signs of froth in any part of the market, or this narrative that it's backed by earnings? Do you have any kind of risk in the horizon which you see?
Yeah, so clearly we've said it for long that the small and the mid cap space, some of the space there some of the stocks there look a little frothy, and there's a lot of retail participation going on there and buying through tips and just the general stuff. I mean, not actually going deep inside the company. So I fear for those kind of investors who are just buying because things are looking good and the past returns have been good, without looking at any risk metric as such. So I think there's some froth in that space. On the flip side, the large cap spaces, the private sector banks look quite attractive. So we have a market which is a bit polarized in that way that the large caps are trading at a discount compared to the small and mid caps. So again, not painting the whole small and mid cap with the same brush. There are certainly quality small and mid caps which will do well, and they are also pretty decently priced, but there is froth in some of the names in the small cap and mid cap space.
All right, Neil, we'll let you go on that one. Thanks so much for joining us on the show today. That was
Thank you,
Neil
Ajay.
Parag Parikh, one of the most conservative houses, but very consistent performers in terms of being a custodian of the retail and HNI wealth, and of course, guide and coach as well.